Hello everyone and welcome to today's webinar, Demica Insight Q4 2021, Keeping Trade Moving. Before we get started, I would like to go over a few items so you know how to participate in today's event. You've joined the presentation using your computer speaker system by default. Please use your speakers or plug in headphones to access audio. You are in listen-only mode. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of your control panel. You may send in your questions at any time during the presentation. We will collect these and address them during the Q&A session at the end of today's presentation. Today's webinar is being recorded and you will receive a follow-up email in 24 to 48 hours with a link to view the recording. I would now like to introduce Maurice Benisty, Demica's Chief Commercial Officer, to begin the webinar.
Thanks very much, Dan. So good to be back with you all. Happy New Year and welcome to our Insight webinar. So just to run through the agenda, I'm going to make some brief introductions of our panelists. I'm going to walk you through our platform data. So we're going to take a look at what's happened in Q4 across different industry segments where our customers report data and share some insights that we have from talking to them in terms of what's happening in the supply chain finance, working capital finance market. And then the highlight is to have a hosted session with Zeeshan Naqvi, Treasurer and SVP of GXO, who's joining us, GXO Logistics. So I won't steal his thunder, but we are very happy to host him on today's webinar. So with that, I'll kick off. I think introductions will come from Zeeshan and Shikha when they start. Shikha's a colleague of mine, senior member of our structuring team. I think most of you know, but I run our commercial team here at Demica. So just to start with, I'm going to talk a little bit about an exciting survey that we're running over the course of the next month. We put this out really to product managers and specialist sales team members, structurers, the different specialized activities within trade finance across a range of different product areas. So securitization, trade receivable securitization, approved payables finance, dynamic discounting, receivables finance, the whole gamut. And what we're doing is trying to get deeper into what's on your mind, and ultimately what do corporate customers, the customers of banks and other finance providers want from the product set. So it starts with trade transformation, technology, right? What shifts are we seeing in the market? This year already, we've had an incredibly strong start with a number of RFPs hanging over from last year and continuing to come in from banks looking to transform the way they service their customers. We've got questions around what that looks like, what the future looks like. Does it involve new technologies like blockchain, or is it about digitizing existing processes? ESG is becoming louder and louder in the industry as an issue that needs to be addressed. What product design requirements exist from the product managers, from product manager teams, and what's the growth outlook? Size of industry growth, what was it like last year, what's it looking like going forward? So I think we're going to put the link in the chat, in the channel. We've had responses from, I think, around 50 or 60 banks across the world, pretty much every continent, and we want to make it as rich as possible. So a call to action for you on that. We look forward to sharing the results. Next, we're going to dive into the data. So just to refresh everybody briefly on where our data comes from. So our data comes from our customers. So we have around 1,000 suppliers selling to over 125,000 buyers in our database. What we do is we modify that data so there are no undue concentrations from any particular customer, so the data is properly anonymized. You can see that the sales volume, which is an extract of the total of 70 billion, is the volume that was achieved in the year 2021. And you can see the industry split and the geographic split. So still predominantly based in Europe, but North America growing quickly as our business expands and our customers come on board in that jurisdiction. And what we've done is what we did and continue to do is to index the sales volume to Jan the 1st, 2020, and track growth thereafter. And we did this originally to see what month by month the pandemic was doing to the industries that we followed. And we've continued to do that as we hopefully emerge from the pandemic and we can start looking at some of the shifts, some of the secular shifts that have taken place and that are holding. So with that, we can go to our largest industry segment, computer and electronics. And this is PCs, laptops, hardware, some software, some services, but weighted more towards hardware. And we've talked at length before about the reaction at the end of the first quarter when COVID hit and the elevated level of sales that our customers saw. We saw line increases. We had new sellers taking advantage of the product come onto the platform. And in 21, that's continued. And talking to our customers, they tell us that if supply shortages hadn't been there, demand would have been higher. And so what's happening is mix is changing and inputs are being prioritized for higher margin items, laptops, gaming PCs as examples, which are in high demand and yield more profit. So we don't see that supply shortage changing quickly. At some point, there has to be a rebalance, but we continue to see this as a very active sector from a working capital finance perspective going into 22 and hopefully coming back into sync as supply catches up. Next segment we're going to take a look at is paper and packaging. This is fascinating for me because for many years this was certainly paper was a declining segment which has turned around for a number of reasons. And you can see in 2020 demand was reasonably steady through the pandemic. So there were shifts in mix and uses, but demand was steady. In 2021 it's really taken off, and that we think is down to increased demand for sustainable packaging as paper and cardboard replace plastics, transformation of packaging, cardboard packaging materials in particular as a marketing medium, as a way for companies to brand themselves. And this has all been compounded by e-commerce. We all know every day that there are more and more cardboard boxes arriving in our house. I think the Amazon man spends more time in my house than I do these days now we've come back to the office. So that continues, and we think that's a secular shift that will run for quite some time. Obviously, no challenge or less challenges there in terms of the physical supply chain. Next page. So I still, whenever I see this chart, it reminds me of those dark days in 2020 when we experienced lockdown for the first time, demand and supply collapsed in certain sectors. And you can see what happened in Tier 1 Automotive, which persisted for a quarter and then had a recovery, but still by the end of the year wasn't back to where it started. And this year demand has been subdued. The automotive segment, which should have been a beneficiary of the reopening of economies, was hit by semiconductor shortages. You can see what's happened to second-hand car prices in different geographies. I've heard of some models commanding higher prices for second-hand than new vehicles, simply because the new vehicles are not available. And record sales for the premium car segment. So again, similarly to computer and electronics, you're seeing scarce resource being prioritized to where firms can make more money, and premium cars as a luxury item has taken the place. I think a lot of discretionary spend as people still have not really been able to go back to travel in the way that they did. So we hope that this balances out, but in terms of volumes have remained subdued on the platform. New facilities extensions, there's been a little bit, but not much. What really there's been is a restatement of limits that were in place pre-pandemic that were cut or held for a period of time. And then finally, we've got our transportation and logistics segment. So I'm not going to talk in detail about this. We've got Zeeshan and Shikha who are going to go into it in more detail. But just in terms of the platform data, you can see this incredible growth. And there are multiple factors driving it. And I think the inflation one that we're reading about all the time is going to be a new one that takes us into 22 and continues that trend. That's my personal prediction, but as I say, I will defer to the experts. So I think happy to take any questions on the platform data when we get to the end, but I'll hand over to my colleague Shikha, who's going to introduce the next section of the webinar.
Thank you, Maurice. And I should add, the last graph that you were showing here had 166 companies reporting data in there, so it's quite representative of sector as such. Just to introduce myself, I'm Shikha Kalra. I work with Demica's structuring team, and prior to Demica, I've been with various banking organizations and a variety of working capital finance roles. Zeeshan, welcome again to the panel. Before we move forward with our conversation, we wanted to show a video on GXO to show our audience what GXO is about. Dan. That was a very cool video. Zeeshan, GXO and XPO, it's been a few months since the split. Tell us more about GXO's evolution as a separate organization and how it has panned out for you.
Happy to do that, and it's great to be with you, Shikha, and the participants today, and thank you for having me. And I have to applaud your IT team for getting that to work, the video. It's not always easy to get these things to work the way they do, but well, I mean, I am really pleased to be talking about GXO and our business today, and some of the related topics around working capital. GXO Logistics is the largest pure play contract logistics provider in the world. We completed our separation from XPO in August, and we trade under the ticker symbol GXO on New York Stock Exchange. What we do is we provide our customers with high value add, technology enabled warehousing and distribution. We do order fulfillment, we do e-commerce, and more importantly, we do reverse logistics services, which are related to the items that you return. So as Maurice talked about, the Amazon driver or UPS or DHL coming to your home, more and more consumers are returning a significant percentage of their purchases, and we help our customers with that as well. We operate in about over 900 facilities worldwide for our customers. And our customers are primarily large corporations that have outsourced their warehousing, distribution, and related services. 30% of our warehouses are automated compared to about 5% industry average. So we're much more at the forefront of automation and technology. Just to put some names to our customer, they're all blue chip. Most of them are blue chip leaders in their sectors, and the sectors that are high growth and durable demand. Some of the names are Apple, Kering, Gucci, Nike, Disney, Nestle, Zalando, ASOS, and Verizon, to name a few. There's really nothing like GXO out there as a standalone company, and we aim to talk today about a massive growth opportunity ahead as we solve our customers' problems. Very quickly on financial side, we are, after all, in the finance function. Our midpoint revenue guidance for 2021 is 7.7 billion, and our midpoint adjusted EBITDA guidance is around 622 million. We're investment grade, rated by S&P and Fitch, and we reported about 25% revenue growth in Q3, and we raised our guidance in 2021 with very healthy sales pipeline.
Great, thank you. You touched on technology and e-commerce, when you're describing the business. It would be great to know, some of the stuff that GXO is doing and making all the magic happen, behind our expectations of things showing up at our door and returning whenever we want to.
Yeah, absolutely. No, I mean, look, we love to show off our technology simply because it's just such a game-changing for our customers. Everything in our business is driven by technology, whether it's robots or cobots. Cobots are robots that collaborate with each other, or warehouse inventory management systems. Recently, and you can watch this on YouTube or others, we hosted Bloomberg Daybreak in our Nestle logistics warehouse in England, which is a fully automated site. And you can see the fantastic site that we have that we built for our very important customer, Nestle. We also talked about what technology means for our customers. And what it means is automation and technology can result in 6 times more boxes shipped out in an hour than otherwise. So there's real benefit to our customers with respect to automation and deploying this technology. They want, what our customers want is they want to focus on their products and marketing of their products. They don't really want to focus on, what's the best technology for a warehouse or how to knit it all together with software and people and get the desired outcome. That's what we do at GXO. We spend around $250 million in CapEx annually, and approximately half of that is in technology. We integrate hundreds, sometimes thousands of different technologies in one warehouse, and all the way from wearable scanners that our teammates wear on their hands to be able to scan, to cobots, as I talked about. And we're really good at integrating all these different technologies into one seamless, efficient warehousing operation for our customer. So for most of our customers, we're more of a technology company than anything else. We're also taking that technology and adopting that cutting edge technology from one sector to another. For example, we typically have used cobots in e-commerce solutions, direct to consumer, but now we're taking the supersized cobots, some of them you saw in that video, and we're deploying them in other sectors, such as food and beverage. And that's really unlocking a really exciting opportunity for both us and our customers.
That's fascinating. On the e-commerce side, tell us more about it. I mean, we as consumers are driving that a lot, but if you could talk to us a bit more about the e-commerce growth that we just saw in the graph as well that Maurice was showing.
Yeah, the e-commerce growth has been well documented. There's incredible amount of data around it, especially in the wake of e-commerce. Personally, as Maurice talked about, more and more of my household purchases items online, and it gets delivered. And what we want as consumers is accuracy is very important. I want to receive what I ordered, the right color, the right size, the right packaging. I want to receive it as fast as possible. The consumers certainly around the world are looking for same-day shipping or one-day shipping. They don't want to wait for those products, and they want a great experience if they want to return something. And we are really good at that here at GXO, and helping our customers be able to meet that consumer demand. And finally, I'd say it's also around technology and service levels. I was at one of our warehouses recently, which is an automated warehouse, and our service level agreement with the customer is that if we receive a fully approved order by 4 p.m., that we ship out that order by 6 p.m. that day. So our cutoff time is 4 p.m. for same-day shipping. That is critical to our customer success and ultimate consumer as well.
I have a question. Because I mean, you know, my first port of call is always Amazon, and people complain, why isn't there more competition to Amazon? Do you think that you're creating that capacity so that other companies can go, you know, take those service levels to the next level and embed different, you know, different ways in which to delight customers and fulfill their needs? Are you starting to see it rebalance, or, you know, are we going to be buying everything from Amazon in the future?
Well, most of the customers' names that I talked about, they want a direct connection with their consumer. They want the consumer to engage with them on their e-commerce platforms, whether that's an app or a website, and they want a direct relationship. And that's where we are, you know, helping those customers achieve really good logistics services to be able to meet that, and to be able to meet that their desire to have a direct connectivity with the customer. I think e-commerce is certainly here to stay. I think I'm just, you know, stating the obvious. I think the e-commerce growth is also here to stay. I mean, the total addressable market in logistics is somewhere around, you know, 430 billion to trillions, and so there's a lot of opportunity. Most of that is locked in-house sourcing. So many companies, you know, do the warehousing logistics in-house, and most of the recent proposals that we have put out for new customers or existing customers that want to add more sites with us are looking for automation, looking for technology solutions so that they can delight their customer. We just announced we opened a very large facility for Saks Fifth Avenue. And again, their service levels and shipping requirements are very stringent. And their customer base is looking for a luxury or for a very high-end service that they expect from Saks Fifth Avenue if they were to walk into their store, as an example. And so the customers want to work with GXO in building that capabilities, simply because not only are we the best in what we do, we have scale, we have demonstrated it, we don't need to go back to the drawing board to work this out, and we are investment grade, and we have a strong balance sheet, so we're able to really help our customers achieve that.
Fascinating. Just focusing on working capital finance, because the audience here would be quite interested. And you know, you've been on both sides of the table, you know, for transactions. What are the various options available for treasurers, and you know, how do you assess them, pros and cons, and your views on that?
Yeah. So in our business, the cash conversion cycle can be long. As I talked about, there is CapEx, although we're very light on CapEx. Just about 3% of our revenue goes into CapEx, and about half of that is in technology, as I talked about. Our biggest expense are our teammates, you know, employee payroll and rents on warehouses. Both are typically paid well before our customers pay us. So financing this working capital is critical for us. Reducing the working capital is critical for us as well. As I mentioned earlier, you know, we have really strong and large established customers, and historically we have utilized a range of solutions such as factoring. We've also utilized our customer supply chain financing programs and securitizations. Our customers are in many cases better rated than us, so their supply chain financing programs can be quite attractive compared with our own cost of funding. In all of these solutions, you know, I think access to good receivables data is extremely important, especially if you operate in an environment of multiple ERPs or fragmented data over geographies or business verticals. And that's where Demica, you know, your team has helped us in that area, along with, you know, structuring various solutions.
Thank you. Zeeshan, that we have some more time, it would be very interesting to know about you know, how GXO is looking at ESG. I mean, it's difficult to finish off a conversation these days without that subject. What are all the things GXO is doing on this front? Especially, I mean, logistics is a very critical sector where this is very important.
Yeah, absolutely. And look, sustainability is really important to our customers. It's important to you know, my GXO teammates, and it's really important to GXO as a company. we want to do great business and we want to do it in the right way. We recently disclosed that MSCI has rated us AA as their ESG rating. It was very pleasing to be able to do that. This rating is one of the highest ratings that MSCI has awarded, any higher rated larger company in transportation and logistics segment globally. We have also set out publicly really impressive and important ESG targets. And just as important, if not more so, is how we're helping our customers meet their ESG aspirations. So typically, 60 to 80% of the carbon footprint for a product is in the manufacturing and shipping to destination market. And if we can help reduce, excess inventory, we can drive real benefits in carbon reduction. The same is true for our, reverse logistics operations that I talked about, which has become very, very important the last couple of years, where we undertake work to get the return product into the hands of another consumer, which rather than a whole new product being manufactured and shipped halfway around the world. So as I said, we're fortunate to work with some of the world's most recognizable brands. And then we work with them on a very long-term contracted basis. We have to be, and we want to be partner with them on their ESG journey. So you can see our targets, on our website, but there's just a couple of them would be, our aspiration, our targets are to be 100% carbon neutral by 2040, 80% LED lighting by 2025, etc.
That's great. We've had a question come in from the audience around inflation. So how, and this is something we've talked in the past, Zeeshan, that you've commented on. How are you experiencing inflation, if at all, and what's your outlook? Because obviously it's going to hit you both on the cost side, and when you think about how you can pass that on and what that does to overall pricing, be interested in your perspectives on that.
Yeah. So I think, look, so if, as I mentioned earlier, we are performing these services on behalf of our customers, and most of the customers were performing this logistics operation in-house, and now we're doing it for them. So many of these contracts, majority of these contracts are where we're able to pass on some of these costs over to our customers because we're really a service provider at the end of the day. I mean, labor inflation is probably the most acute one in our industry that we're facing. And I think, it's really important for us to have real-time data. We work very closely with our customers around labor. And in this environment, as I talked about, our automated solutions are really helping our customers as well. And we see more and more customers adopting automation and helping us defray some of that CapEx as well. So I think labor inflation, we do see some signs. I would say since September, October of last year, we do see some signs of that easing a bit. We do see more labor availability. And we've done a lot of work around the world, not just in the last year or in the last quarter, but we work with a lot of technical universities, et cetera, to develop the next generation of our teammates who can come in and help on the logistics side. But on the short term, I would say labor challenges, and we're doing a lot to address them, whether that's in the form of benefits, whether that's in the form of addressing and delighting our teammates.
Great. I think the other thing I'd like to hear about is, you've just gone through the separation of two companies, right? Which I can imagine across functions must have been a challenge, but certainly within Treasury. Talk about what that's been like. Has your life returned to normal? I guess would be a question, having gone through what that meant, because obviously they're now two separate public companies. Just be fascinated by some insight into that experience.
Yeah, absolutely. So I think firstly, it's important to note that our operations in terms of warehousing and front end and customer facing were always, had no impact as a result of the separation, right? If anything, we are a public company. We are a strong investment grade company. which helps us with many of our customers that I spoke about. I think corporate functions are a whole different story. XPO, as with many other corporates, especially treasury or finance functions, I use this phrase of lean, mean, fighting machine. So XPO had quite lean finance and corporate functions. And so not many of those associates were able to come over to GXO. So certainly in the finance and in treasury, we've had to build our teams. And certainly in treasury, we've had to build our entire team on global basis. So it's been quite challenging, but quite rewarding experience as well. You learn a lot having gone through that. The success of our company, my team's work is extremely important to the success of our company. As I said, we've had to stand up a whole new team. We finally took over treasury operations in November from XPO. So they were performing it from August till about November. And it's been, I would say it's been tough and challenging to find good talent in this environment. And we are a return to office company. All of our 100,000 teammates have to go into the warehouse every day so that all of us can get the packages that we have ordered. And we believe that the corporate functions should be in the office to be able to collaborate, especially post-spin, and build the company and continue the success of the company. So in that backdrop, it's been challenging to find. I was speaking to you from sunny Greenwich, Connecticut today, to find finance functions in this area and in London. But we've been very fortunate to be able to find. It takes a certain type of a person to want to come into a spin to really build something from scratch. We have of course taken over processes from XPO and have continued them. So the lift and shift is done, but now we're assessing almost every part of those operations to make sure that they're still optimal for GXO fact pattern, our balance sheet, and our capital structure. And so my team is very motivated to dig into almost every aspect, whether that's liquidity, cash management, investments, FX risk, funding, insurance, working capital. We have a blank slate to work with, and we're going at it. So I don't know if it will get normal, quote unquote, anytime soon, but we're all excited about the opportunity and the challenges, and that's why we're here.
Maybe a bit more. I'm just looking forward to a bit more normal in general. I don't think there is really a normal, but that's what we hope the future holds. We've had a question in to pick up on some of the points that you made around different working capital products. When you look at the market more broadly, what would you like to see more of? What, if anything, would you like to see less of? In order to have those financial products aligned to what you need in managing your business, kind of on a go-forward basis.
Yeah, I think so. In terms of products, as I said, personally in my career, whether that's here or in my prior roles, have worked on quite a few of these different products. So as a corporate treasurer perspective, I look at all of these products as part of a toolkit that I have available, and then depending on the circumstances and the priorities of any particular corporate, you pull different levers to be able to achieve your desired outcome. Whether that desired outcome is to have short-term sort of intra-quarter liquidity, or if someone is looking for medium-term funding, or be able to pass on or transfer credit risk potentially of your customers or vendors. So I think it depends on what you're trying to achieve, and there are different products that help achieve that. So I'm not sure if there's a big gap that I see in product toolkit. I think it's more around looking at holistically. I get pitched a lot about one product or another, and for me, it's really not about product. What I'm really looking for is solution of what is it that I'm trying to achieve, and how do I get there in the best optimal way possible. Lowest cost, best execution, certainty of execution, and counterparty are really the key parts for me. And I think as I talked about, the data is really critical, and good data is very critical. And in most of the companies that I've been, you're dealing with, in most cases, fragmented data. You're dealing with multiple ERP systems, and be able to pool the data in a standard way to be able to get analytics and understand what you have as receivables or other assets or liabilities is critical. So there's some in-house work, if you will, that can be helped by experts such as yourselves. And then there's the external world of, I think there's lots of tools available, but they need to get, I think the way that they're marketed is probably more silo-based as opposed to solution-based.
Zeeshan, one question. We touched on a bit of technology and e-commerce, but there are other things, as part of the pandemic, there are a lot of disruptions that happened, and that was visible in the graph in the first half of 2020. But the other challenges, your customers faced, and how did you react to those, demands from customers at that point in time? Any stories to share from that point?
Yeah, now, I'm just reminded of, I think it was October timeframe where there was a headline, can Christmas be saved? There was a lot of concern in the media around, will we be able to get all the e-commerce growth and be able to get to the consumer what they're looking for in times of holidays. And we did a lot of work at CNBC and Bloomberg to help our investors and customers understand, what we're doing and our capabilities. I think, look, supply chain has always been challenging. It's always had challenges. Whether you think about, if you look at UK, there was Brexit. Before that, there's Mars. It's not been. There have been series of events throughout in the last 20 years that one can point to where there have been supply chain disruptions, and the industry as a whole has had to address those and to be able to meet that challenge. I think, obviously, as we all know, the pandemic has exacerbated some of those challenges and brought them to the forefront, where there's a lot of conversation around it, especially in the media and other cases. I would offer just a few observations for your attendees. I think, there's, I don't think there's any surprise that there have been supply disruptions, primarily due to pandemic lockdowns. They're well documented. Several countries, particularly in Asia, had much longer and more severe lockdowns in last 2 years, in 2020 and 2021. I remember, in late 2020, we had one of the directors in one of Malaysian legal entities move on or leave us. We had to replace the person, and the banks were closed. In Malaysia, you have to go into a bank branch to be able to sign the paperwork, and we were told that bank branches are closed. So the lockdowns have been quite severe, quite long in many of those economies that are on the supply side of any particular goods. I think it's important for everyone to know that. Second is transportation-related challenges, and one item that Mark Manduka, who's our Chief Investment Officer, talks about a lot is air cargo capacity. Air cargo capacity is considerably lower today due to fewer planes flying. And what's that done is that's put a lot of stress on other modes of transportation. And as air cargo capacity increases, we would expect to see an improvement in some of these supply chain issues. And I think it's higher demand. It's higher demand in US and Western Europe, particularly in e-commerce area that we've been talking about. So I think we serve as GXO many different sectors. Each sector is facing the challenge in different ways. In retail, we see our customers, increasing their direct-to-consumer or e-commerce channel, and many times they're bypassing their retail locations in order to get the goods to the consumer faster. So rather than going from port to warehouse to retail to consumer, they're just going from port to warehouse to consumer direct more and more. Even personally, from my own personal experience, if I walk into a store and they don't have the inventory, rather than them getting it into the retail store for you to go pick it up, they would much more rather offer you a shipping to your home. And that's what we're seeing more and more in retail, certainly. I think in other sectors, we're seeing customers ordering more and earlier. to try to build that inventory and secure it. And so I think it is a little bit dependent on the sector. I can't really talk too much about the Q4. We have not announced our earnings, but it's well documented that through Black Friday in the US and Christmas, the e-commerce rates were higher, as you've shown yourselves in the chart, and we were able to meet that demand, significantly higher demand this season. So I feel good about what we have been able to accomplish on behalf of our customers, and I think that just shows the resiliency of our industry and of the solutions that GXO is able to provide our customers.
Well, I certainly think you should play GXO Saving Christmas into your investor relations materials. I think that's great, and it's true, right? I mean, that was our lifeline, right? Was being able to order and receive goods in the only way we could when traditional channels were shut down, and I don't think anyone expected the industry to be able to step up and provide the level of service it did. I think we've got one final question, Zeeshan, as our webinar comes in. It's been a great discussion around treasury. So the question is, how is the role of treasury changing? Right? I'd be just interested in your perspective. Very broad question, but interested in your take on it.
Oh God, it's one of the fastest evolving finance functions that I would say in my career, from focused on liquidity, cash management, then financial risks, to now really being a partner to CFO on the strategic priorities, getting your balance sheet ready for potential acquisitions, or stress testing your balance sheet to be able to weather a potential downturn. I think treasury has become more and more important. We are really fortunate to have a really great CFO, Barish Oran. He gets it in terms of how treasury can add value to an organization. So that makes my job a little bit easier. But I would say from a treasury perspective, so protecting financial assets, if I look at what is the base expectations of what treasury should deliver, is protecting the financial assets of the company, is to manage the liquidity and cash of the company and protect against financial risks, whether that's FX, commodities, rates. More and more beyond that, you're seeing treasury being combined with other functions, particularly in corporate. So you'll see treasurers that have other responsibilities, such as tax or insurance and global risk management, such as the case of me, or working capital for the company. So treasurers are being asked to do more and take on more and more of these roles. And I think the digital finance is really the biggest driver of some of this change, or enabler of this change, where we need, where what we are being asked to do is provide not data, but insightful analytics to be able to make timely decisions. And so I think that shift is one of the biggest ones that I've seen in my career, from working with spreadsheets, downloading from ERP, spending hours on manipulating data, to now just in time, not just data, but for some system, some IT tool to do first level analytics or basic analytics, so that someone like my team, who again are very lean, mean fighting machine, if you will, they can pick that up and perform more higher function analytics, apply their judgment, and be able to provide insightful analysis and recommendations. So I think those are some of the things that come to my mind as I think about treasury, and I think it will continue to evolve. I'm excited about the future in treasury. I think we'll continue to be a bigger and bigger partner to not only larger finance functions, but to the C-suite. And I think that's the biggest challenge for us as well, is how do we do that with insightful data analytics and skill sets, growing the skill sets to be able to rise to that challenge, to be able to help our CFOs and CEOs.
Well, that certainly resonates with us. Kind of our mission in life, if you will, is to be able to serve that data up and to have it retained in the platform so it can be manipulated for analysis, working capital optimization, and also allow collaboration between treasury, procurement, and sales, because that's really what drives, I think, supply chain finance and the opportunity. If you can offer your customers longer terms and manage that risk or manage the liquidity impact by being able to sell the receivable, and the sales teams know that, then can you grow sales? Equally on procurement, if they have approved payables program, supply chain finance is a tool available to them, but it all needs to be connected and it needs to be simple. And I think we're still at a phase in the industry where we're relatively early in that transition from, you know, these being products deployed to specific use cases to more of a holistic solution that treasurers can take advantage of. So look, it's been a great discussion. Certainly, I think, you know, Shikha and I have enjoyed it. Thank you so much, Zeeshan. You know, we go back a long time into our G Capital days, and when you were talking about standing up separate, you know, finance functions and splitting things up, it did bring back memories. So some of them good. It was certainly resonated with me. And you know, I'd like to thank our audience as always for dialing in. So unless we've got any more questions, which I don't think we have, we'll wrap up there. And thank you very much.
Great, thanks for having me. I've enjoyed it.
It's been fun. Bye.